In this video I want to talk to you about the 7 most successful swing trading setups. I'm trying to give you these 7 tips, and I'm also trying to shift to the charts to show you guys exactly what I mean. So let's get into the first one, and the first one is a trendline bounce. Sounds pretty obvious, but let me show you what I mean with that. Okay, so here's the US dollar against the Swiss dollar chart, and as you can see on the 4-hour chart, which I prefer to be trading, we can see that price is moving in a certain channel, supported by this trend line. Now, of course, when I, for example, explain things like these, looking at charts from the past is pretty easy to pinpoint where what is happening, but when this didn't happen yet, it's sometimes pretty hard to identify these levels. So to be clear, in this case, this was a we came from a downtrend, and we had this pattern here. We had probably a breakout of these this resistance, retest, etc., etc. And then we had a major pullback. I think this is something news driven, but price got rejected eventually over here. We had a certain fake breakout, but we didn't know back then it was a fake breakout, and then we started trending again. So the fact that this was a low, this was a high, this was a higher low, this was a higher high, tells us that this price is moving to the upside. So with this first higher low in place, we can start to draw a trend line, and eventually we see that for the 5th time at the moment it is being touched. So that's a little bit on how to put in that trend line. So if you are a swing trader, this is what you do. After this, now we have this trend line in place. Also, we can draw a trend line on the upper side, so we can identify a channel a little bit, but more on that later. If price comes down from here, we know that probably price will react when it comes to this this trend line. So that's what I mean with a trend line bounce. When this happens, I usually zoom in a little bit to the lower time frames to see if this in fact is showing me something of a reversal or a potential bounce to the other side. That eventually happened. We started trending, and you can do you can use it different things. Maybe you want to set your take profit on the previous highs, or maybe you have some more you have a different strategy and you're like, there's more into this trade than just previous highs. Then of course you can let it run, and over here this is the first time where you would be making an even bigger profit than before. We had again a certain bounce off of this trend line and starts moving, and at the moment we are seeing in fact a bounce of this trend line. So this support seems to be met again over here and seems to hold. So this looks like a potential bounce and could continue back up to this level. This is just a one-on-one basic simple swing trade perspective, also from the trend line bounce idea. So let me get to the second one. The second one is a support or resistance bounce. Now, support or resistance, of course, depending on the direction of the trend. Let me show you on the previous chart. Like I said, a support bounce. Well, if you are not really into the trend lines, this is something else that could be interesting. This was a resistance area, like I showed you in the past. When price breaks out and comes back to touch that could be an entry signal. Well, this had 2 touches, but if your stop loss would be in a safe spot just below here, nothing was wrong, and then we had a certain move. Now, where do you put your take profit on this one? That's kind of hard to tell at the moment. Well, we had this news event or something happened over here. We dropped back. This was a in this part of the chart. It's kind of hard to trade. You don't really have a have an entry over here. So again, price starts moving. This is an area where price found some resistance, some support. Price was kind of indecisive over here, and then price came back into this level again, and we are into this could have been a more supply demand zone, but support and resistance kind of entry. Then we started moving again. Price came back. In this case, I think that the trend line strategy would be the better one. Over here you can see a potential breakout that actually makes sense. Over here we see an actual support line that makes sense. So price in this case, when it's an uptrend, needs to tends to pull back into areas where price found support or resistance or was struggling in the past. So this is kind of, if you look in the past, this was an area where price became kind of indecisive. Are we going up? Are we going down? Same thing over here. This resulted in another push. This eventually resulted in another push, and for the third time it came back into this area, resulted in another push. So maybe at the moment we are looking at some resistance over here, some support, some indecisiveness where price was in for a long time. Price moved back in, we have this pin bar, it jumped right out. When a second time it came in, we have a pin bar, moved out, just jumped out. And at the moment, if this green bar will close high, then this would be a third pin bar. So this also is a level to be looking at. Price tends to move. A funny saying is bulls, so when the price is going up, bulls tend to take the stairs. It's kind of, you know, it's like you're taking the stairs. That's the way price pushes higher, comes back to retest, pushes higher. And bears, I don't know what it was, but jump out of the window or something like that. Once price breaks an uptrend, coming down often happens a lot faster. As you can see, this is just a couple of days, and this has been going on for a while. So keep that in mind. Keep that in mind. This is a little extra. The third one is identify a channel if there is one. Well, I showed you a little bit on the chart. That in this case we do have a clear pattern. We do have a kind of a channel, even though the channel is the upper side of the channel isn't being met, which could mean that this is slowly not becoming that bullish anymore, and we're becoming bearish. But that's something for the future to see. But this is some kind of a channel. So in this case, you know that when price starts moving again, you have some kind of direction where it could be heading. This only came into the previous highs, and this one came further, but it didn't touch that trend line again. But you have some kind of direction. Well, of course, this one is going to the upside, so the bounces, the pullbacks back to the lower trend line in this case should give you information on when to get notified, because you want to potentially take a trade. If this does shift maybe in the future, and we could identify a similar channel, then of course make sure you are reacting to looking for short positions, and trade with the trend in that case when it shifted to the downside. Another thing you can use are Fibonacci retracements. As you can see here, I've put a Fibonacci level on the same chart. As you can see here, when price started moving with this huge green candle, the first time it came back, it came back into this first Fib level. Then again we had a push, and it found support near the second level. Then again we had a push, and of course this probably news driven drop was something that cleared more Fibonacci levels, but again it came into this level and it started moving again. Again, we found some support over here, then we found resistance at the 50%. Again, some kind of support, because price left pretty fast when it came into this area. Here it was resistance as well, and then we started moving, and we see that price tends to react around those Fib levels. It's kind of a self-fulfilling prophecy that price is in fact reacting to these levels. Because everybody is using Fibs as a tool. Well, don't get me wrong, do not trade just Fibonacci levels, because it's just some information on is it just support I'm looking at, or is it just a trend line I'm looking at, or can I add some information to confirm my idea that a actual bounce is happening over here. Another thing you can use is RSI Divergence. Let me show you on the chart. As you can see over here, price came from this down move and started to find started to consolidate a little bit, but was still making those lower lows, as you can see over here. The RSI was telling us a different story already, because this low got followed by a second kind of low, even though it's a pin bar, and then we have a low over here and a low over here. But the RSI was already showing that price was gaining some momentum to the upside. Again, this is something, you know, it's not just RSIs you can watch and to spot divergence to call a trend shift. And of course you want to jump into a trade over here and ride it all the way back up. Same thing is kind of going on at the moment because we have a high over here and then a minor higher high and an even higher high over there. So what we are seeing over here is that price is not really supporting the idea of moving to the upside. But then again, do not ever use divergence as a strategy on its own, because price action at the end of the day has to confirm that price in fact is slowing down to the upside and is turning around. So also keep that in mind. Let's switch to the next one. Head and shoulders. This kind of a you know, when you're swing trading, you're waiting for a pullback to enter the trade and pull back up. Well, what I just showed you, that RSI divergence, is something that is telling you that this trend is maybe coming to an end. So by the time you are spotting that it's not moving that aggressive anymore, a potential reversal could occur. And as a swing trader, what you want to do is still jump into a swing trade, but it could mean that you have to jump in that trade the other way around. So let me show you what I mean by that. As you can see over here, right now actually price is kind of slowing down with the upside move. We don't know yet because this can continue back to new highs, but it kind of looks like when we look at the RSI, we see some price action, of course, that is telling us a little bit that the highs are getting a little bit less aggressive. So if you think that this is not your trade anymore because it has been going on for so long, this would have been an amazing ride, this would have been an amazing ride, and maybe you're a little bit doubtful that this will be another runner as well, then pick your trades. There are better trades out there. If you don't think this is worth a long position, again, if it does shift, something you could be looking for is that this would be the head, this would be the left shoulder area, and this could potentially move into move into that area to form the right shoulder. And when it breaks, we have confirmation that that we are moving further on to the downside. If that's the case, then like I said, as a swing trader, you just switch direction. You still get into pullbacks back into, in this case, resistance levels or downward moving channels or downward moving trend lines or things like that. Also, you can use fibs. It's all possible. Let me get off this fib for now. And then you just take on this is a long swing trade, this is another long swing trade, and what you do by then is just take your first new swing trade, but then in the opposite direction, just trading the same currency pair you were trading in the past. And last but not least is kind of the RSI divergence and then head and shoulders, when you're already calling the reversal. A breakout and retest is something to add to your strategy. For example, if this indeed does continue, we could see a breakout, or maybe we are getting into the right shoulder right now, for example, and then we go back and we break this support level, move right through it, and come back for a retest, and then we have our first reversal pattern. We have our first confirmation that price is in fact going to turn around, and this is something, of course, that would be the first trend line, and this could be your first entry when you come back to, you don't know yet if this would be the trend line, but based on this price point that could be on the charts in a couple of days, then yeah, of course this trend line would help you to make that decision. But also this support level, or when you talk about head and shoulders, this would be the neckline. This would be broken, and then we come back. And we're just talking price action. You're after that you're making lower highs and lower lows, and you want to get in on a pullback, and as a swing trader take your profits